traders, Cousin Vinny coming to you from theclosingprint.com on November the 10th, 2019. In this edition of your weekend video newsletter, we'll discuss the bullish continuation that we saw last week on all of the indices and where we might be headed into the second week of November. The big cap tech names were all higher last week with the exception of Facebook. We had a really nice run in Apple and Microsoft towards the end of the day, especially on Friday. Tesla also moved higher on an Standard & Poor's upgrade from negative to positive. Most of our indicators and oscillators are bullish, continuing their cycles higher that started over 5 weeks ago, as more stocks continue to break out going into the second week of November. Gold was lower, copper is trending higher, that's bullish for the markets, and we did see West Texas crude for the third week closing above its 20-period moving average, looking for follow-through and a test of the $60 a barrel level in the short term, which would be bullish for equities as well. Bonds were lower and yields were higher as fund managers continue to rebalance their portfolios going into the seasonally strongest months of the year just ahead. We'll look at some IBD50 names and some MarketSmith Growth 250 for this week that are showing relative strength. We have Bukowski with 5 of 5 green with a CPI signal green since October the 9th, coming in at 84.8%, which is bullish, with 5 bearish patterns, 28 bullish patterns, and 355 patterns waiting for breakout. Again, the numbers in parentheses are the previous week's data. Bottom line, we're anticipating a follow-through this week as fund managers continue to play catch-up with only a few weeks left for bonus time. So we'll be focusing on the stocks that are showing the most interest in the sectors that are showing relative strength for trading this week. Starting off with the ARCA Institutional Index, the 75 stocks most commonly held in institutions' core portfolios, continues its trend between standard deviation 1, the darker area, and standard deviation 2. Having broken out 3 weeks ago, we continue to produce green and blue elder sticks, no red elder sticks, and no closes inside of standard deviation 1, which would be a caution signal going forward. And momentum is clearly with the bulls. The S&P 1500 is on a buy signal. Green line is rising rapidly. We have the S&P 500, S&P 400 mid caps, and S&P 600 small caps in this index. Histogram continues to produce green bars above the zero line, with price action trending above the bullish 9 EMA. And if we break down the three components, the S&P 500 advanced decline percent in the upper panel, mid caps in the middle panel, and small cap advanced decline percent in the lower panel, we can see we're making higher highs going into a seasonally strong period of the year with fund managers chasing stocks higher as they attempt to outperform the S&P 500 for better bonuses. Parsing the data a bit further, we can see in the upper left-hand corner here, IGX:IVX. This is the S&P 500 Growth Index versus the S&P 500 Value Index. You can clearly see that this line is dropping. That's telling you growth is not performing, whereas value continues to outperform, rising rapidly away from the bullish 20 MA, with these stocks paying dividends, attracting more attention. The Dow Jones Composite is also trending higher. We can see wicks underneath Friday and Wednesday's candles, showing buyers stepped up at the lows of the day. We would like to see a move back up towards the highs that we saw on Thursday, with RSI trending higher and the 9 and 20 EMA rapidly rising underneath price. This is 65 stocks in the industrials, transports, and utilities group. Here we have the S&P 500 in the upper panel. We can see we're clearly breaking out. We also pointed out this week that if transports broke out of this descending pattern like it did previously back in 2016 and before that in 2013, that we will most likely see a repeat of the bullish action we saw for the following 2 years between 2013 and 2015, and again on the reversal in 2016 into mid-2018. We also see IWM performing, breaking out as well. Similar thoughts here, breaking out in 2013 and again in 2016 led to major gains in IWM, small caps, transports, and the S&P 500. Look for continuation this time as well. The spider's Rinko chart continues to produce white bricks as the cycle turns higher, confirming what we're seeing in price action. The trend is bullish. In addition, last week we talked about the NASDAQ weekly breaking out to new highs, following through again last week. Volume continues to improve, and we also had MACD with a cross following through, as momentum is clearly with the bulls going into the second week of November. So while growth is underperforming value, we'd expect to see some of these growth stocks follow through, like Microsoft did at the end of the day on Friday. And look for Apple to give us a cue whether or not it'll be a trade this week as well. Midweek, we talked about the IWM breaking out in its point and figure chart if it filled this 160 box, which it did. Looking for a follow through and a test of these highs in the short term. As we saw in the transports and S&P 500 chart, we should see IWM follow through as well, as risk on appears to be overtaking fear with VIX at lows, moving ever closer to the 11 and 12 zone, showing complete complacency and lack of fear in the markets. Anything could affect the markets at this point, so we are somewhat cautious. And in addition, with VIX this low, puts tend to be cheaper, so we'll be looking for fund managers to hedge their positions as well. If they start hedging towards the end of the year, we'd like to see this line continue to drive higher. It's doing exactly the opposite. So with the markets clearing previous highs over the last 2 weeks and breaking out, we expect to see price action continue higher, and we'll look for any change in direction in skew over the next few weeks as SPY continues to drive higher. Of course, many traders and investors will be looking at breadth to improve, because at the moment we do have some divergence with lower highs on the S&P 500 advanced decline percent in the upper panel, mid cap advanced decline percent, small cap advanced decline percent, and NASDAQ advanced decline percent pulling away from price as we move higher. So fewer and fewer stocks are participating, though we did see over the last 5 weeks at least 10 stocks a day breaking out on average with our alerts with MarketSmith. So that's unusual, especially considering very few of them moved lower. So the combination of fund managers trying to make up for a lack of performance and stocks breaking out, we still need to see breadth improving if we're going to get more aggressive. We can see NAMO for the NASDAQ McClellan oscillator starting to peak here. Doesn't mean that the markets will stall at this point. We've had previous occasions where we flattened out, price action continued to move higher. If we do see some kind of development with China regarding tariffs and the U.S., if we do have some sort of positive news, then we could see higher. Breadth could start to improve. But if we start to hear news that China is balking because the U.S. hasn't dropped all of its tariffs to sign phase 1, then that could be a problem. So tread with a little caution and keep your ears open for improving breadth. We'll try to keep you up to date as well during the live sessions. As NYMO for the New York Stock Exchange McClellan oscillator gives us the same sort of look, with NYSE flattening out as well. Price action still hasn't started producing red elder sticks. That'll be a first sign that we might see a little acceleration lower, maybe test these previous highs as a possibility. Don't want to sound too bullish. As we saw fewer stocks making new highs versus new lows in this chart, you can see that we've started to diverge from the highs we saw early in the week. Watch the moving average. If we start to see fewer and fewer stocks breaking out, that'll be something we'll notice first thing in the morning on Monday. There is a possibility we could come back and retest these breakout highs right around 13,250, 275, something like that. NYAD is moving higher. Remember, this is skewed a bit because it does have ADRs, mutual funds, and preferred stocks in here. So there's a bit of a skew. That's why we want to keep an eye on these three advanced decline percents, S&P 500, mid caps, and small caps, because there is no skewing here. You have the 1,500 stocks that comprise the index, and they're all moving higher. So it's a bit of a skew on the NYAD versus what we see here on the S&P 1500. So just keep that in mind going into the week. So here is the bond stock ratio in the lower panel. We can clearly see that the red line, the ratio between the 10-year bond and the S&P 500 is dropping. That's telling you that the S&P 500 is favored over bonds at the present time. We can clearly see that we've got 4 green elder sticks on the week, continuing to drive higher. Previous to current price action, we had 4 weeks up before we started to produce blue elder sticks. And prior to that, we had 6 weeks before producing a blue elder stick, then going to green again. So basically 8 weeks up before pulling back and testing this higher low situation. So we could possibly see another 2 weeks higher, perhaps a 5th week and a 6th week because of the seasonality and fund managers trying to chase price action to try to make up for lost performance earlier in the year as everyone was more cautious. Therefore, as we discussed last week, we thought that we might see more rebalancing in TLT, the 20-year, IEF, the 7-10-year, the 5-year bonds, the shorter duration bonds. We thought we might see some deterioration there as well. And that's exactly what happened. So we got our follow through. We hit all of our targets. We came very close to 134. We hit 136, 135. We did fill this gap. And it looks like we're headed straight back into this zone right in here where we've had 8 weeks of consolidation before blasting higher back in August and September. So look for TLT to move lower. I don't think it's going to be a straight shot, but RSI is dropping. MACD has crossed, and we clearly see bond managers have started to exit their trades. They rebalanced at the highs. Now I'm looking for lower prices as we pull back further. This is AGG, the Barclays Aggregate Bond Fund. This is what bond traders use as a benchmark, similar to fund managers that trade equities using the S&P 500 as their benchmark. So AGG is definitely seeing some rebalancing here. I'm thinking that we could come back to the 30-period moving average here, or the 50-period, which would be slightly lower in the weeks ahead. This is where we got long back in October of 2018. We've had a stellar run. Expect to see more rebalancing as this becomes an obvious overcrowded trade and fund managers rebalance their portfolios. We've also discussed over the last 10 to 12 weeks that we've been watching for the 10-year yield TNX to rise. This is bullish for equities. We can clearly see PPO momentum oscillator here has started to cross over and move higher over the last 2 weeks, like we did previously in 2012 and again in 2016. I can't stress enough how important this is for performance in the S&P 500 in the lower panel. When we reverse back in the European debt crisis, when Greece had to be bailed out and the European Union helped them out, that was a debt crisis that saw the 10-year yield dropping. It eventually reversed. That turned into a 66% gain before we topped out in early 2015 and eventually drove lower in the waning months of 2015, as we all remember. That drawdown led to a follow-through in 2016. So expect to see the same thing as we continue to rally, as this long-term cycle continues to unfold. Junk bonds and high-yield corporate debt, of course, are another risk-on, risk-off indicator that we utilize, as we always look for junk bonds to give us the heads up when weakness is starting to come into the markets, as we saw back in 2018. In October, this clearly gave us a signal as it dropped down through the moving averages. It started heading lower very quickly. We don't see anything like that right now. We've had 2 weeks of buyers stepping up at the lows of the week and expecting to see price action move higher in the weeks ahead if we're bullish. If this starts to trail off and start to sell, keep an eye on junk bonds and high yield corporate debt, HYG, for that signal, if it should come at all. Looking at currencies for a moment, this is the British pound US dollar pair, which did come back a bit. It did help the London Stock Exchange a little. We did see some pullback in the exchange and the FTSE. It seems to be in a rounding top situation, so we really like to see the British pound US dollar moving lower if you're trading in London or on the FTSE. That would potentially lead to a breakout and a move higher. For the time being, this looks like a fade, so I would trade with a bearish mindset going into the holidays if I were trading stocks on this index or the FTSE. So in order for that to happen, we of course need to see the US dollar continue to move higher if you're trading on the London Stock Exchange or the FTSE. Whereas for US investors, we want to see this rejected at the 50-period moving average, not rallying higher like we saw last week, blasting right through the 50-period moving average. This looks like it's headed right back up to the highs, which could form a triple top. This will form a headwind for U.S. indices in short term if the dollar continues to move higher. We'd also expect to see gold dropping dramatically as it's traded in U.S. dollars. We can see the gold versus SPY ratio continues to drop, so gold is underperforming the spiders, so we want to be long equities right now. Despite the headwinds that the US dollar will create if it continues to move higher, we don't want to be trading gold in that situation. As we can see, we talked about this a few weeks ago, that if we drop below this level here, we'd be inside of a reverse Kirby. The price action would accelerate to the downside. I know some of you, Ricky Neal and some of the other traders that were trading gold short last week, did very well. We broke down on Tuesday, tried to hold up on Wednesday. Thursday was a bloodbath. And then Friday, of course, we're starting to see a little stabilization. So I'm thinking we could get down to this lower trend line. Doesn't mean we will. But RSI is still moving lower. Volume has picked up quite a bit. And MACD is below its signal line and dropping. So watch gold and the US dollar this week. It'll have an impact on US equities as well as commodities in the short term. Of course, if you want to be long equities, you also want to see a confirmation in copper and West Texas crude. So both of those have been trending higher over the last couple of weeks, so this looks good on copper. We need to see this trend perpetuate, get above this area here, the Kirby on the bullish side, and look for follow-through this week, especially if we're considering trading equities. We want to see West Texas crude continue higher as well. This has spent 3 weeks above the 20-period moving average, been in a 29 to 30 week sideways range. MACD is above its signal line. This has a bullish correlation with equities, so look for this to continue higher. Sector performance is also waning a bit. We're changing. We're seeing a few more yellows and oranges in real estate and the REITs, in addition to utilities and staples. So watch for continued weakness in those sectors. While we watch for biotechs to continue higher this week, we'd like to see IBB and XBI follow through like we saw on Friday, with MACD back above its signal line and rising. In both the big caps and small cap biotechs, we can see XBI is sitting here right at the 200-period moving average. Volume increasing on Friday. A lot of small caps broke out last week. Looking for a continuation this week. We're also looking for transports to continue higher, materials to continue. We saw chemical names and some of the basic material stocks moving higher last week, with the sector closing at highs. The communications sector, thanks to performance by Disney, great earnings. We did see Netflix pushing a little higher, Charter Communications and Comcast, among others. Look for follow-through as it trades in an area of no overhead supply. RSI continues to rise, and MACD remains above its signal line. Energy is holding just below the 200-period moving average, so we'd like to see performance there as well. Financials continued higher. We did see banks doing very well last week, while industrials also outperformed. Continues this breakout that we saw the previous week on Friday in an area of no overhead supply. Volume increasing, did taper off into the highs that we saw last week, with MACD's above its signal line and rising. Technology continues to improve. Those two sectors look really good for this week. Continuation along with biotechs as well. MACD's above its signal line. Tech continues to perform, and volume is pretty significant, with staples and utilities pulling back, showing underperformance. We'd like to see healthcare continue this week as well, and also with consumer discretionary going into the holidays. We have some turning here going on. We've been looking for the XOY-XLP ratio to turn. We see the short-term moving averages turning up. That's bullish for equities if that continues, and we want to see XRT retail continue this week. Looking at the IBD50, we want to see price action above the 9 and 20 period moving averages. We had Adobe following through last week. RSI is rising. Look for a breakout above this level. There's really no resistance until we get to 313. There's a little bit right here at 298 that we might run into. MACD's above its signal line, and volume has been increasing. Look for a breakout to start the week. Alibaba continues to follow through. Volume increasing. MACD above its signal line. RSI is rising. Align Technologies following through, trying to break out this week, looking for a gap fill. RSI is rising. MACD is above its signal line. Boot Barn also followed through. We have a breakout to 52-week highs. RSI is above 50, and MACD is above its signal line. Look for a follow through this week. CB Richard Ellis, this is an office REIT. They take care of quite a bit in the Northeast, offices and an improving economy. We'd expect to see this moving higher. We do have some bullish action off the 21-day, and MACD is above its signal line. Cargaroos following through last week. Look for some resistance around here's 38 level. If we do flag, look for volume to taper off a bit more, and then follow through in the short term. CDW, nice pullback to the 90 MA. This is a good setup. We're looking for a touch of the 90 MA perhaps. It might not happen. Look for a bullish day on Monday. If we get a bullish candle, we could see follow through. I'd like to see more volume. And of course, MACD would stay above its signal line if we do have that bullish follow through this week. Comcast, as we discussed, with performance in Disney and Netflix, the communications sector, XLC, continues to reflect bullish trends in these stocks. Look for a follow through this week. $45 stock. RSI rising. Look for a test of 47.24. If we get that, MACD's crossing. In the short term, we look for increasing volume. InvestNet, we haven't seen this one on the IBD50 previously, where we got a nice trend in the 9 EMA and the 21 EMA. RSI is rising. Price looks really good. We had a little test of that ATR plus 3 band, so there might be some selling up there along this support that was lost here around 67, 68. So let's look for a follow through this week. Volume was above average, and MACD continues to trend above its signal line. Essential Properties REITs, this one is outperforming and shows good relative strength versus the whole peer group in real estate, which did move lower last week, showed some weakness. So look for follow through in EPRT. If we get a breakout, RSI is rising, MACD is turning, and volume is increasing. Euronet follow through. We're looking for a breakout, and MACD remain above its signal line. Look for a breakout and a continuation if we see some volume here and RSI continues rising. Fortinet continues to rally after that gap and go 2 weeks ago. It just keeps going. Volume is increasing. You can tell when institutions are picking up shares, the stock just never pulls back, and we start to see RSI muscle like we had back here the last time it ramped higher in July. Huya, another Chinese name. Many of these Chinese stocks broke out last week. We were looking for that follow through in Baozun, Baba, IQ, and others. We did get it. Look for Huya now that it's clearing this 24.97 zone to get back up to 28.29 in the short term. MACD is above its signal line. Volume continues to thrust higher as RSI remains above 50 and is rising going into this week. Insight is in the pharmaceutical slash biomed medical space, develops small molecule drugs to treat cancer and inflammatory diseases. All of these have been outperforming recently. Nice little flag here. Looks like it's going to break out. We've got a 100% increase in earnings. Big surprise there. Look for a follow through in this stock as we continue higher. Bullish engulfing candle on Friday. RSI rising, volume increasing, MACD above its signal line. In mode, we're looking to get back into this one post earnings. If we can get a pullback to the 9 EMA, that would be a choice entry if buyers step up like they did here and here. So wait for evidence to confirm your situation. We'll be watching it this week as well. If we do pull back to the 9 EMA, that would be a good setup. Looking for a bullish follow through. Another wellness and medical related company out of Israel. J2 Global breaking out, not interested in chasing anything. On these pushes higher, what we look for is a fade or a move back to the 90 MA. Look for a flag. It could be that this is going to accelerate. Notice the last time it got bullish here, it lasted about 10 days, and again here. So we've day number 5 now, so maybe we get another 3 to 5 days going forward as MACD and volume continues to rise and RSI is above 50. JP Morgan and the banks continue to trend. These look really good going into the second week of November. Look for this trend to continue in many of these banking stocks as XLF is clearly trending as well. Leidos Holdings is new on the list. This one looks like it's going to break out. The company provides scientific technological solutions primarily in the areas of national security, health, and engineering. Nice little cup and handle pattern. We got relative strength line at 89 and climbing. Annual sales and earnings look good, and we have some decent IBD numbers there as well. Lululemon on the bounce. We had a hammer last week on Tuesday, follow through Wednesday. Thursday and Friday moved back above the 21-day. I really like this stock going into the holidays. Look for a breakout and a continuation. RSI is rising, MACD is turning. We'd like to see more volume going forward and an earnings run in the process. Lumentum Holdings, light, also breaking out. We got RSI muscle. Nice little ascending flag. Looks like it's going to continue. Nice volume and MACD above its signal line. As we can see, with annual sales and earnings climbing, the company provides optical communication, photonic products for manufacturing, inspection, and life sciences fields. Looks really good. It's just above the buy zone, so any pullback into the 65 area would definitely be interested. We got earnings beat by 9%, a surprise at 20%, above average volume on the breakout. So if it does flag or give us an opportunity, we'll take a look at light going forward. Merck is my favorite pharmaceutical company. I'd like to see this one get back above the 21-day. Unfortunately, it's in this sideways range, so any pushback above the 21-day will probably get rejection at 87. So it's right in the middle, looking for some catalyst to push this higher. Microsoft, we have calls on this one in December, the 145s. This had a nice little breakout on Friday that we were trading in the room. So congratulations if you took it. Consolidated for 10 straight days against the 9 EMA. We finally got our breakout towards the end of the day on Friday, ABCD pattern. We traded that perfectly. MACD's above its signal line. I'd like to see more volume now and a continuation on Monday. Momo, another of the Chinese stocks that continue to see buying action, looking for a follow through this week. In addition to Paycom Software, which is above the 21-day now, we had a nice bullish engulfing candle on Friday. RSI is rising, MACD's above its signal line, volume increasing. Looking for a follow-through day on Monday. Paylocity, PCTY, looking for a follow-through and continuation here with RSI rising, price moving away from the 90 MA, having tested it last week on Monday and Tuesday, following through Wednesday, Thursday. Nice bullish candle on Friday. MACD's above its signal line, volume increasing, RSI rising. Everything you want to see for a stock that could potentially test 112.46 in the short term. Salesforce continuation. This one's been on our radar since it moved above the 21-day. It broke above this trend line and followed through. I know David Doflippa is trading this one. I almost joined him on this one. Congratulations, David. Looking for a breakout and a move back up to these highs at 168 in the short term. MACD's above its signal line. I'd like to see more volume on RSI is rising. Into earnings, which are only 24 days away. So we could see an earnings run and a test of 167 in the short term. StoneCo, like Merck, is in this sideways range. It's right at the median. Could see a push back up to this 38, 39 level in the short term before potentially running into resistance once again. RSI is rising and MACD is flat. OLED saw some action last couple of weeks. We're looking for this to follow through and break out. This gap and go is holding above the 90 MA. Maybe one little test of the 90 MA. I'm thinking it's probably not going to do that. It's just going to take off to the upside. It has a history of doing that in the past, where when it starts to gap up, it flags and then breaks out again and then just continues. So look for that to happen in OLED if this continues to show strength. As the company already reported a beat of 63%. Back at the end of October, volume increased, looking for a test of 230 in the short term. Good sales and earnings climbing, quadrupling from 2018 into 2020. That's pretty good. Got a 980 EPS rating. Good numbers on IBD. Viva Systems, we like trading this one, but it continues in this descending pattern, so it has to get above the 21-day at first. So this is probably going to take a couple of weeks before it even starts to look good. We want the moving averages to be climbing, not descending, if we're going to trade it to the long side. Visa and the payment processors, MasterCard, Pays, we're looking for these to continue higher going into the holidays, okay? So that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. Traders, will send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. I got to get outside and enjoy the day. I hope this helps. Take care, and we'll talk to you soon. Most likely, we'll update the watch list with a post on Monday morning.